Hello students, we are discussing about the services of commercial bank or functions of commercial bank, services which are provided by the commercial banks to the customers. So in that the first type of services, agency services, we have discussed about those in detail. Second, miscellaneous or general utility services. Even we have discussed about those types of services. Now, today in this video, we are going to talk about other new services or modern services which are provided by the banks to the customers. Nowadays, banks, rather than providing primary services, that is just accepting the deposit and lending the loans and advances, they are providing a number of services to the customers. So what services do they provide usually? They provide us passbook. Then there is a check drop box facility in the bank. Then nowadays we can see that RTGS, NEFT facilities are available. Funds can be transferred from one place to another place. We can pay the electricity bills, phone bills, internet bills, etc. through the bank accounts. So people need not to stand in a queue, and the work can be done sitting at home with a internet connection and a computer. Then banks provide us credit and debit cards. No need to carry the cash along with them. So nowadays banks provide technical advice with respect to investments, with respect to loans, etc. So these are certain things, certain additional services which are provided by the banks to the customers. Now, why banks have to provide these modern services, new services to the customers? Because of liberalization in the financial sector, there is increasing competition amongst the banks. Customers' expectations from the banks are increasing. In order to survive in the market along with the competition, bankers have to provide new services to the customers. So in this fast changing business environment, banks which are efficient in technology and proactive, those banks only will succeed in future. So in order to remain in the competition, they have to provide these services, they have to adapt the technology, and then they will succeed in future. So for that sake, banks have to provide a number of modern services to the customers. Today, banks are providing new banking products or new banking services to the customers. Which are those new services which are provided by the banks to the customers? These are as follows. The first is collection and payment. Second, execution of standing orders. Third, collection of dividend and interest. Sale and purchase of securities. Safe custody, mail transfers, ATM, mobile banking, extension counters, tax consultation, and insurance services. So these are the new services, modern services which are provided by the banks. So in modern days, banker provides various new services to the customers. So new services with respect to mobilization of deposits, movement of deposits from one place to another place, and in case of granting the credit to the customers. So now we are going to talk about these services in detail, new services in detail. The first service is collection and payment. Now, what does it mean by collection? So, collection means the bank collects the money from the depositors or from the customers of the bank. Now, do the banks collect these deposits in the same way? So, only one scheme is available? No. But there are various new schemes which have been introduced by the banks for collection of deposits from the banker. So, when bank collects the deposit from the depositor or customer, there will be different options which are available to the customer. As we have seen that in case of if the customer does not require that money for the longer term period, then fixed deposit is ideal. If he wants day-to-day transaction, he wants to use that account for business, then current account. If he wants to save money every month, and once only he want, sometimes in between he wants to withdraw it, savings bank account is ideal for that person. So for collection, there are new schemes which have been introduced for collection of deposits. Rather than those deposits, what else new schemes are available. Now we are going to discuss about those type of collection or payment. Some of the schemes are as follows. Which are the schemes? The first in that is cash certificates. So we have already discussed in case of deposits, that is what are the cash certificates. So cash certificates, these are the deposits which are accepted by the bank for a fixed period. Bank goes on accepting those deposits, and interest is included in the final payment. Say for example, every month bank goes on accepting the deposit for a particular period. At the time of repayment that amount to the customer, interest for that amount will be added to that and it will be repaid to the customers. Second type of scheme is daily saving certificates, that is pigmy deposit scheme. What is daily certificates or pigmy saving certificates or pigmy? So under this scheme, banks accept small deposits from small depositors every day. This scheme is ideal, beneficial for daily wage earners. So pigmy, the person from bank, in case of pigmy, the person from bank visits the customer every day. Every day customer goes on depositing certain amount of money. It may be 100 rupees, 50 rupees, whatever amount it will be. At the end, whenever the customer wants to withdraw that, he can withdraw. Along with the interest, the person gets the money. So this is ideal for daily wage earners. Out of their daily wage, they want to save something. To inculcate the habit of saving amongst the people, these schemes have been introduced. That is pigmy. Then next is minor savings scheme. In my case of minor savings scheme, bank accepts the savings deposits in the name of minor children. Account will be in the name of minor children. This scheme is introduced to inculcate the habit of saving amongst the children. So this scheme is with withdrawal facility. The children can deposit the money, even they can withdraw the money. So to inculcate or encourage the habit of saving amongst the children, this scheme has been introduced. Nowadays, there are banks which are women's banks have been started in order to attract the deposits from women. Next type of scheme is monthly interest income scheme. So in this monthly interest income scheme, banker receives a fixed deposits and interest is paid monthly by cash or credited to the saving bank account. So monthly interest scheme, a certain amount is kept by way of a fixed deposit, and every month or quarterly, once in a quarter or once in a 6 months, as per the requirement of the customer, the interest is paid to the customer either by way of a cash or that amount is credited in the customer's savings bank account. Usually retired people used to use this scheme. So they used to keep lump sum amount by way of a fixed deposit, and every month they used to withdraw the interest for their daily expenditures. Next is retirement scheme. Retirement schemes, monthly installations of deposit are collected for certain period and accumulated interest is repaid to the account holder after a specified period. So while the person is working, every month from his salary certain amount is deducted for certain period. What accumulated money, what generated money, gathered money, collected money will be there. Interest is paid on that money at the time of retirement of that person. That is retirement schemes. Next is farmers deposit scheme. Farmers deposit scheme. In this scheme, the farmers deposit money twice or once in a year. After harvesting their crop, the farmers get the money. So once in a year or twice a year, farmers can deposit that money in the bank. They can withdraw that deposit, that is 1/10 of the deposit every month can be withdrawn. So once in a year or twice a year they get money. That large amount of money they can keep it in the bank, and every month they can withdraw 1/20th of that deposits every month. Next scheme is insurance linked savings account. So insurance linked savings account, this scheme provides life insurance protection to the account holders under special insurance linked saving bank accounts. So there are certain banks which provide bank accounts which are linked with insurance services. The person who is an account holder, he will get the insurance protection because of opening an account in the particular bank, savings account in the bank. Next is mutual funds. Nowadays, mutual funds are also, this service is also provided by the banks. That is, they can invest on your behalf in mutual funds. So what are the mutual funds? Mutual fund means it is pooling the resources of various investors and creating a diversified portfolio of securities. Nowadays, people are preferring mutual funds. So mutual funds are give high rate of interest. These are safe compared to direct investment in shares. Bankers collect the funds and they invest it in mutual funds on behalf of the customers. The investors in mutual fund get tax benefits. It is easily liquidated, that is easy liquidity. So these are the different schemes which are available under collection and payment. Now, in our next video, we will start a discussion about second service in modern service, that is execution of standing orders. Thank you.